So what we're going to do is basically this class lecture and activity and the PowerPoint slides. So if you click on this link, I just added it. And so this is something that I have been doing since this is the third semester. So I'm trying to create all these fun, fancy things like this because I have this fabulous program, and basically, and it's a bit more interactive. So if you hit start lesson, these are all the different lessons that I included in there. Very similar to what you were supposed to do before class, but not everybody does everything. So I tried to make it available here. So here, if you click on this link here, it should take you to my webpage, and you should see this introduction to auditing. And then if you click through it, you'll read why do audits exist. And it's basically, let me bring out my annotation tools here, basically to mitigate business risk, right? So if you think of auditing, if you think of accounting as an allocation of scarce resources, right, cash, then what we're trying to do in an audit is try to make sure that the financials are free of material misstatement. And basically, as financial professionals, we're trying to say that these are good financials, if you will. Okay, and then basically the more complex the business, the more time sensitivity, there are certain factors that will increase the demand for relevant and reliable information. Where in GAAP do you see relevant and reliable information? Do we know? How familiar are we with GAAP? So relevant and reliable information are qualitative characteristics of GAAP. And those qualitative characteristics are part of SFAC, Statement of Financial Accounting Concepts, okay? And I do believe in the course resources, there is a Google Doc with a bunch of acronyms, because a lot of you are concerned about the reading, a lot of you are concerned about the writing, and I would say another large concern is the amount of acronyms that we use in auditing in general, but also in just accounting, right? So the Statement of Financial Accounting Concepts deals from FASB, right, the Financial Accounting Standards Board, and they are the ones that create GAAP. But what we follow is usually GAS, Generally Accepted Auditing Standards, or auditing standards from the PCAOB, right? The Public Company Accounting Oversight Board, which was founded by the SEC, which is the regulatory body for the actual 10Ks and the 10Qs that we are auditing, right? So a 10K is an annual report, a 10Q is a quarterly report. And as auditors, we audit all of those. So if you didn't know that, now you know. Look at that. And then you could read through all of this, but basically it's just giving you like where the organizations have come. And it is actually kind of detailing for you. Here's your PCAOB, right? And it's telling you Sarbanes-Oxley. You will see Sarbanes-Oxley, some questions on your exam on that. So take note. And I do believe there is one question. Basically what I did in this lesson that I created here for you, this little guy, then I created here, I gave you like a practice quiz, as you can see here, and these are 10 questions that you'll see on your test to give you an idea of what it is. Let me stop because I'm going pretty fast and how yet, because Lord knows I get excited about this stuff. So that's what this is telling you. And then we have like a little summary, then we have some videos, and this is what you're going to watch without me because you don't want this. And this is from Investopedia. I would say for your cases, you do not cite Investopedia. You can refer to Investopedia, but any type of writing that you do not cite non-scholarly sources. Now, we do have a professor in English, Dr. Vetter, that lives for Investopedia, but in the business world, we don't like that sucker. so we don't, you can refer to it, but just don't cite it. Okay. And then we're going to talk about the definition of financial statement auditing when I go through your PowerPoint and breaking it down. And what you're going to have to know here is what the American Accounting Association includes in their definition and what they don't, right? And this is the American Accounting Association's definition. And I am an avid member. So if you go to my website, here are all the sections of, I lost it. Where was it? I didn't let it load. Right here. This is everything that I'm a member. So that's the American Accounting Association, which is kind of like the premier association for academics and practitioners. And they're not really a regulatory body, but we do a lot of research. And so basically that's what guides, and hopefully, and we work in tandem with the CAQ, right? So the Center for Audit Quality, so CAQ. And so the Center for Audit Quality is another area. Let me put that in the chat for you all. And so just so you have all the resources that you need. And so that is what and so you're going to have to know that for your exam. But we'll talk about that more. We're going to talk about financial statement audits, and we're going to talk about the different types of audits and actually fraud or fraud examination. XBRL is one of my favorites. It's existential business reporting language. And it's basically now we have what's known as inline XBRL. So with inline, I just love this stuff. It's so great. So inline XBRL, existential, it's the X, not the E. And then business reporting language, right, is what's used by the SEC. And it used to just be plain XBRL, right, which is just where we take numbers and we give it data tags. Now with inline XBRL, we're doing that. And if the number is underlined, that means both a robot and a human can read it, right? So I can still see the number, 1.3 billion, but then also we can teach bots and it can be easily machine readable as well. And that's like a new advancement. So if you don't like technology, I'm sorry, because you should, because that's like the way of the world. And I mean, I'm very techie and I love it. And so, and I always learn, I think last semester, my AIS class, we had one of the best lectures on emerging technologies. And I learned so much about cryptocurrencies and some of our students were doing some day trading, and I'm like, God bless. And so we always learn from each other, but I think that is the way of the world. And I can tell you as a CFO, like I would give you a phone, I would give you a computer. And if you ever handed me a piece of paper, I would be upset because why? We have computers. And then I can check your audit trail. And I gave you a computer on my network so I can mirror it and follow it if I was going to fire you to see what you were doing, which I did that with the VP of finance, marketing once because she was annoying me. And cyber risk. You will see that cyber risk is becoming more and more important. And, I think we had T-Mobile recently gave us some they had a data breach. If you haven't, that's the other thing, because we're going to, at the end of our lecture, if you do IUP Wall Street Journal, make sure that you click here. Let me put this in our chat as well. Make sure that you're signing into the Wall Street Journal, please, every day. I don't want to lose this. I love the Wall Street Journal. I've been reading it forever because I'm old, but make sure you sign in. You just click on it. And please sign in because I want to keep our services. It seems like we're constantly losing things to this time. And so it goes right into your single sign-on. And we are going to look at a few articles, at the end of that's something you'll do offline so that you don't have to be here 3 hours going crazy listening to me. And if you logged in correctly, it should say your name up here. So, because it should pick up your single sign-on information from, Dow Jones is up, hey, but everything else is down. Lovely, great. Anyway, so just make sure you do that. All right, so back to, and then we're going to talk about financial statement assertions. Write that down. Management are the ones who make the financial statement assertions. We, as auditors, are the ones that test it. And there are different management assertions, and this is going to be heavily tested on your exam. So I'm going to give you maybe 1 or 2 questions today on it, but there is probably, I think for this particular chapter, there's only 10 questions that are selected for a 4-year exam, but there's 35 in the entire pool. So you get 10 today to see what it is. And you do need to know what the PCAOB, the Public Company Accounting Oversight Board, standards are, assertions are, like existence. Did this actually happen? We usually test that through confirmations, like we always do cash confirmations. Rights and obligations. Do we have the right to that particular asset or to that loan? Completeness is everything recorded in the period that it should be. It's all of the transactions. Are they there? Completeness is a very predominant when we're testing for revenues, valuation or allocation. So what do you think? What are some accounts on the balance sheet that we have estimates with? What is an account, or some accounts, because there's several. What are some accounts on the balance sheet that require an estimate? What do you think? You can either speak or you can type it in the chat. What's an account on the balance sheet that has some type of estimate? Warranty liability. Excellent. Correct. Good. That's one. Excellent. Any other thoughts? Lovely. Thank you. No other thoughts? No other estimates? Did we review the financial accounting information? So does cash have an estimate? Yes or no? Or maybe thumbs up or thumbs down. Let's see. Thumbs up. Cash has an estimate. Thumbs down. Cash doesn't have an estimate. Good. Thumbs down. Absolutely. Thank you. Excellent. Accounts receivable. Are there estimates associated with accounts receivable? Thumbs up for yes. Thumbs down for no. What do we think? Do we have a thumbs up? We have a thumbs down. We have a thumbs up. Okay, no, it's a thumbs down. Well, I'm sorry, it's a thumbs up. Excuse me. It's a thumbs up, right? Because think about it. Accounts receivable here. Let me connect my iPad a second, so that way I can go through this. So how do we record accounts receivable on the balance sheet? Right? Because whoever said we do need to know GAAP in order to audit. Let me try to connect my iPad so I can use my my stylus. You guys can still see and hear me okay? Can you guys, yeah, oh great, okay, just making sure. I want to connect my stylus so that I could bring up a whiteboard. And hopefully, are you seeing a whiteboard?
Yeah.
Oh, fantastic. All right. So think about, let me see. Let's see here. Oh, here, let's draw. Perfect. No, let's not. All right, that's good. Excellent. So we have net realizable value, right? Another acronym. So what does that mean when we come to accounts receivable? Anytime you're thinking of any account in auditing, I like T accounts, but I hate black. Let's pick a different color. Let's go with blue, right? So we have beginning balance. When do accounts receivable go up? With sales, right? They go down with cash receipts, and then we have an ending balance. What's the net part? We have gross accounts receivable less what to get to net realizable value? Allowance for doubtful accounts, right? So isn't that an estimate? Yeah, right? Does that make sense? Or is everybody confused?
When you say estimate, like, could you explain that more by any chance, like what it entails, I guess, in the definition?
Yeah, so an estimate is something that you don't know the true value of, right? So for example, when you're looking at allowance for doubtful accounts, you're kind of giving your best guess or your estimate if that customer is going to pay or not, right? If you're thinking of depreciation, which is another account.
That's what I was going to say next. I'm so
So asset, and then we have accumulation, which is a contra asset, right? And then with the contra asset account, so we're taking our asset, right? Whatever, equipment, vehicles, whatever we have, computers, and then furniture and fixtures. The only asset that is not depreciated is what? What is the only asset that you do not depreciate?
Land.
Correct. Thank you. Land. We don't mess with that. And hopefully that gets increased. But anyhow, then if you have to estimate the useful life, you might have to estimate the salvage value, and depending on what depreciation method you're using, right? You could either use straight line, makers, modified, right? Accelerated cost recovery system. Why do we use makers depreciation or a double declining balance or a declining balance? Why do we use those types of depreciation methods if you were a client? Because it gives us what? Higher depreciation, which would give us lower taxes. And LIFO is an inventory valuation, and it's the only inventory valuation method that basically is allowed in the United States and not internationally. So when you're thinking of estimates, you're thinking hopefully of this. Does that make sense? So that's how I want you to start thinking when hopefully I'm talking, and or hopefully as you're going through this material.
Okay, thank you.
Yeah, no problem. And I see lower tax liability. Thank you. Absolutely. Wonderful. Sorry, I didn't see that earlier. So basically, that's what you're doing here. So keep these management assertions. I would write these down right now, or screenshot this, or embed this. You can embed this if you're in EndNote. I'm sorry, in OneNote, and because this is probably a very important part of your exam. And then you have the ASB, right? So you have different other standards. So this was for the PCAOB, and this is for the ASB. We're going to talk about it, but I would have them side by side. So I would have in your notes a document, like, and just keep one column for your PCAOB standards, and then you have one column for your ASB standards. Assertions, I'm sorry, not standards, assertions. And then we go into assertions about account balances. So keep in mind that when we are talking about account balances, here, this is a type of substantive testing. So we have three types: analytical procedures, substantive testing of account balances, and the third one is account transactions. Okay. And the analytical procedures, that's a P if I could write, this is usually done in the planning stage. Okay. So just things to keep in mind. And I'm giving you a lot of information because I'll be repeating myself 1,000 times, which is absolutely okay, because until you get it, we're going to make sure. Okay. And then we have professional skepticism. And so this is something that we're going to talk about in one of our cases. So and keep in mind that when you are talking about professional skepticism, here you want to make sure that you are using the PCAOB definition, because the PCAOB is the authority that gives us our auditing standards. And that's pretty much the main authority. Okay. So if you had a chance to review this before class, that would be great. Wait, sorry, I hit the wrong button here. And then once you continue, you can practice the CPA exams. And then this video lecture, I also included it in your lesson, and you'll actually look at this afterwards, because I try to go a little slower, but I hope so. I tried. So that is right here. And again, we were here. So just in case I'm losing people, remember, we're in module 2, chapter 1, because Thomas corrected me. Thank you, Thomas. You're a doll. And right here is our class lecture and activities. So this is what I clicked to get to this link. Everybody with me? Questions? Good? Okay, I see 1. I see 2. Good. 3. Woohoo. Okay, we're listening. 4. All right, keep moving. Here we go. So these are the PowerPoint slides, and then here is the lecture. So I'm going to download these PowerPoint slides and go into that so I can kind of give you the gist of what you should know for the exam, and basically an overview. So in this case, you're going to have to, if you don't mind unmuting yourself and telling me if you see, because I'm going to try to annotate on the PowerPoint slides. Do you see, let me, just the slide? Can you just let me know? Oh, wait. No, use slideshow. Hold on. Oh, hold up. Can somebody unmute and tell me, do you see the actual, just the slide? Correct. Is that a true assessment?
I don't see it.
You see it or no? Yes?
I don't.
No. Okay. All right. No problem. Great. Thank you. Nobody sees it? What about now? Nothing? Oh, maybe I'm not sharing. Duh. Sorry. No, it's me. It's not you. It's me. I got rid of it when I clicked it to mirror the image. What about now?
I can see it.
Okay, wait. I'm going to do one change.
Yeah.
Yes, still?
Yeah.
Woohoo,
You can see it.
Awesome. Great. Thank you. I appreciate that. just so that I can annotate on the PowerPoint slides, hopefully to slow down. So thank you, Michael. I appreciate that. Now I could see, because now I have it. So yeah, if you use thumbs up, I could see some of you in my gallery view. I didn't connect other devices today, so that's why. Maybe the next time we meet, I'll have 2 other devices connected so I could do all of that. All right, so let's talk about auditing and assurance services, because that's pretty much at the end of the day what we're doing. So these are all the, let me go back. These are all the learning objectives that we're going to do. I'm going to talk to you a little bit about it. So we talked a little bit about, let me make sure I can annotate here. We talked a little bit about reliable information, right? So, and we did talk when we were discussing, and you're able to see that I highlighted, I circled the word complex. Is that showing up on the Zoom?
Yeah, you're good.
Ah, thank you. Appreciate it. Great. So definitely we have, I would say, more complex information. We also have information that is unstructured. Okay, meaning, so we have structured and unstructured data. We have qualitative and quantitative data. We have remote users. We have cloud computing. We need information like the speed of light, you know, and the key is that we need to mitigate risk. So there is an audit risk model. Audit risk equals control risk times detection risk times inherent risk. So I told you won't be doing a lot of formulas. That's one of them, right? So and we're going to talk about the audit risk model going forward, but just keep in mind that we do have the audit risk model. We're talking about control risk. We're talking about detection risk and inherent risk. And basically when we're doing that, we are just trying to mitigate risk at the whole point. Keep this in your notes: information risk and business risk. Those 2 will be on your exam, and you're basically going to have to identify what they are, right? So information risk is, we're going to put like the risk of actually giving like a company is giving information, and like we mentioned, false or misleading. The difference between error and fraud is intent, right? If it's just a simple mistake, error. If you're trying to steal, fraud. And business risks is basically, most organizations have, you know, strategic plan, they have a vision, they have a mission, they have goals, and you're not going to make that. Oh, let me get rid of that. Sorry about that. So this just talks about audit quality and what the PCAOB did and how they did that through different types of, there's audit quality is one of the key areas that we research in terms of auditing. And so typically there are different proxies that we use for audit quality. And that goes into that. So this is another area for your test. Let me make that big here. Keep this in mind. So basically you want to know what the definition is for auditing. And basically it is a systematic process, because we do some planning. And we're obtaining and evaluating evidence, and that evidence has to be sufficient and appropriate for the audit opinion that we're issuing. And we're issuing evidence based on management assertions. Management makes the assertions, and we provide attestation services to those assertions. And we are seeing the degree of correspondence between those assertions and the established criteria. So we're checking towards gap. I don't know if we're really, the client is applying gap. What we're doing as auditors is we are saying if that gap is true. You know, is that the best? Is that what gap intended? And then we communicate that results via the audit report, which is basically the opinion. Okay. So keep this in mind. This is definitely on your exam. And interested users, anybody that relies on the financial statements. And one of the key things that we have is we have third-party liability, which basically means we're not only liable as auditors, especially external auditors, to the users of the financial statements, but also to other third parties as well. And typically, and then we also don't have attorney-client privilege. We don't have auditor or auditor-client or accountant-client privilege like the attorney does. If you tell an attorney something, they don't have to come forth with it. We as auditors do, but we'll talk about that when we get into ethics and a few of those. So here is an overview of the financial statements. And I think we discussed last time that we would start with the income statement, right? Then we would move to the statement of retained earnings, which is not here, but I always like that because then we need retained earnings to go into the balance sheet. And then we go into the statement of cash flows. And then you see the footnotes here. What we are auditing as auditors are the financial statements plus the footnotes. And we are doing what's known as an integrated audit. We are auditing the financial statements plus the internal controls over, financial reporting. That should be an R. Internal controls over financial reporting. So we're going to issue 2 opinions, or we can issue 1 combined opinion. And we can issue a different opinion on each. And we'll talk more about internal controls because I saw that was an apprehension from someone. And the body that we use for internal controls is COSO, the Committee of Sponsoring Organizations. So we as auditors have to audit the footnotes too. We need to make sure that whatever in those footnote disclosures, and there's always the same first footnote. It's a summary of significant accounting policies. And then basically we have GAAP and IFRS, right? So GAAP is the Financial Accounting Standards Board, and the International Accounting Standards Board is who issues IFRS. So depending on what the body is. And then basically we are trying to kind of pull this all together, and the end result is this audit report, which is our opinion. So far, so good. So here we have another definition that should be in your notes, our attestation engagement, right? Which is basically that we're reporting on the subject matter, or there's an assertion about that subject matter, and that is the responsibility of another party, which is basically our client. So the client is who hires us as external auditors to do their audit, right? And so we might have other types of engagements, right? And anytime you have an audit, you're going to learn that we have engagement letters. And then we also have management rep letters as well. And then basically, not only are we looking at the auditors, but we have to, as the financial statements, because we're auditing them, but we have to look at the forecasts. We have to look at the projections. We have to look at the MD&A, the management discussion and analysis, and any pro forma information. Okay, then we have non-financial attestation engagements, and then this is where that audit opinion on the internal controls over financial reporting comes in. Obviously, we need to, then we might also have compliance audits, and this would be a compliance audit. Are you in compliance, or are you actually following environmental regulations? And now we have a new topic, ESG. So that's relatively new. That's another hot topic, environmental social governance, right? And so, because then we have also CSR, corporate social responsibility. So you might see the triple bottom line, you might see something known as green financial statements, and it's basically where organizations are doing things that are bigger than themselves or bigger than profits, right? And so they're either recycling, or they're trying to have a positive impact on the environment, or they might try to be better to the environment. They might have better governance. They might have better social programs. So these are 2 new research hot topics. And even, and actually ESG is a topic that came out, and there is a new ruling that now certain organizations have to adhere to some ESG standards, and the FASB just came out with that. So that is still hot off the presses. I just attended a conference last week to hear more about this, because I love to stay current and know what's happening so I can bring that to you. And then here we have a non-financial type of environment where we have, and so you could see this is just an example where we're looking at more sustainability, and we're looking at the global business environment. They say the world is flat. So this just gives you an example of that. So make a note to come back and read that. Then we have what we're pretty much doing, which is assurance services. And this is independent. Don't forget that word. Independent in fact and appearance. We have to be independent in fact and independent in appearance. And that's usually as an external auditor. And that helps us to give a higher quality audit and a higher quality of information. And then we can talk about XBRL, we can look at our assurance services for information risk. Definitely keep this in your notes because you're going to ask questions about it. We would have internal auditors. The difference between an internal and an external auditor, internal auditors work for the organization, external auditors work for an auditing firm. And, we hopefully don't want to have fraud or any illegal acts, and we don't want any issues with cybersecurity as well. So here you see a little bit. So here are the assurance services down here. And then here's where we're at. So we cover a lot more activity. So.
He's a business, sir.
Oh, sorry. Yeah, go ahead. What's that? Oh, no problem. Is there a question? No? Okay, no problem. All right, then we want to talk about Sarbanes-Oxley or SOX. So Sarbanes-Oxley, I don't know what happened to my poor iPad. She died. Okay, basically, this is probably one of the key features. So you want to make sure that you are familiar with Section 302. So put this definitely in your notes. The key, what happened? Go back, Veronica. Oh, what did I do? Sorry. The key here is that the CEO and the CFO have to actually certify the financial statements. They have to say, yes, I read this. Yeah, there isn't anything false or misleading in it. And then, yes, that this is an accurate picture of the company. And so Sarbanes-Oxley or SOX, S-O-X, as you will see, is definitely something that has been relatively new in 2002. And so we want to make sure that you're familiar with it. So these are the management assertions, and each of these management assertions is what management is providing. And we as auditors, because this is done through the PCAOB, we as auditors are kind of providing our attestation services to assure that they are correct. And each revenue account or each account has a type of assertion. So for example, revenue completeness is the issue. Valuation, if it is more complex, let's say for investments, derivatives, now cryptocurrency is falling under the valuation, or if there is any estimate there, presentation and disclosure, you have to, for example, make sure that you are disclosing in the footnote disclosure for the liabilities, the loan amortizations. So there's a bunch of rules that we need to make sure we are adhering to. And then for each of these assertions, you're saying, hey, did it really occur? Did this transaction happen? And has the transaction been recorded in the correct period to the correct account? That's completeness and cutoff. Is it accurate? And the classification are the ASB assertions. So like I said, you want to have two columns here, and you want them both to be, you want them like side by side so you can tell the difference. And then we also have account balances where we're looking at existence, rights and obligations, completeness and accuracy and valuation, but for the entire balance. So did we include all the assets? Do we have a legal claim? Is that a right to that item? Is it all included? Is it accurate? Are we valuing it properly? And then when we talk about presentation and disclosure, are we making sure that we have all the proper disclosures, that we have grouped everything together, the certain GL accounts together, and in making sure that everything is adhering to GAAP. Management assertions are probably the place where you will spend most of your time, I think, in this chapter, and it will also be the highest tested point of your chapter and for your exam, and it's also because of the CPA exam. So then we have, wait, let me do this 1 second. We have, let me make sure I can go back. And let me, discard that 1 second. My poor thing died. Where did we go? We were here. Let me see if I can bring my iPad back. So, because this is important, because you have to see the relationships between each of the financial statements, how they interact with one another. Oh, wait. Are you still able to see the PowerPoint? Yeah, great. Thank you. Okay. Are you able to see it now in the slideshow mode still? Oh, let me get rid of this closed captioning.
Yes.
Awesome. Great. Thank you. Wonderful. Great. Let's make sure she's going. Perfect. Okay. So I know this is kind of small, but you have it. And then basically this is our balance sheet here. So let me, oops, come down here. Perfect. So here's our balance sheet, just in case. Here is our notes to the statement. And then it's the summary of significant accounting policies. That's always the first note. And then here is our income statement. And then you're seeing how does cash really exist? Here, we actually test this with a confirmation. We send a standard cash confirmation, and when we get to that chapter, I'll show you. And basically that's the key. Rights and obligation, how we test it. Inventory, in this case, we have to test with a physical inventory observation. Inventory. Where let's say it's a calendar year end, so that means on December 31st, do not make any plans to go to anywhere on New Year's Eve if you are a first, second, or even third year, fourth year auditor, because they're going to send you somewhere to do to actually count inventory. And when we get to that chapter, I'll show you how we do it. And then valuation, typically we look at it from an investment perspective. And then the income statement, when we're looking at revenue here, we want to make sure that we're testing that, yes, those transactions did take place, that it is an unearned revenue, and that we have all of the transactions in the right place. And then here you see that our footnote disclosures, all of them helps to test management's assertions of presentation and disclosure. So professional skepticism is where, as auditors, we get in big trouble, right? So when we're talking about professional skepticism, we're not using that questioning mindset. And this mindset is also becoming important in data analytics. You know, ask the right questions, see what the data is telling you. You just can't ask questions. You as an auditor have to obtain evidence. And those evidence is your work papers, your lead schedules. So you need evidence that is sufficient and appropriate. You want to make sure that the documents are authentic, that they're not manipulated with, or that they're not fraudulent. You want to make sure that if you're asking questions, you're getting the answers. If you're requesting documents, which we call PBC, provided by client, that's a list that you as an auditor is going to give your client, and you're going to keep track, making sure that everything that you ask for, all of the bank statements, all of the general ledgers, the trial balances, the supporting documentation is there. Now what we're doing more is we're doing more machine learning and simulations, right? So basically, if you select a sample, we can actually program a robot to say, give me all of these invoices, and hopefully electronically, of course, and then provide that to the auditor all electronically. We're also doing confirmations electronically. So the reason we need this skepticism as auditors is because we don't want a potential, conflict of interest. And we also want to make sure, obviously management wants to tell you the company is great, they met all of their protocols and everything, they beat expectations. What happens to a stock if the company does not beat expectations? They miss, guess what? Stock price goes down. And then so as auditors, we have to give assurance to shareholders that the information that the company is telling them is actually fair and accurate. So then we have let's get rid of this a second. Oops, sorry about that. We have, come back. Wait 1 minute. What did I do here? Sorry. Bloody buggery. Did I do? Yeah, perfect. Sorry, I just want to make sure I didn't skip anything on you. So as with anything, we have a check audits, we're involved heavily with checklists, procedures, processes. So hopefully we go through this process. This is a step-by-step process. Do we do this? I think not. We know it. We should identify the issues, what's happening. We should identify the alternatives. More importantly, we as auditors need to gain that evidence. And then based on the evidence and what the evidence is leading us is where we build our audit conclusion. And then we just need to document that. And typically you document that in your work papers. And what judgment you got there and the assumptions that you did to get there. I don't think we really go through the step-by-step process in practice a lot, but the end result is the same. We need to document in the work papers, because when another audit firm comes in to do a peer review, which is required, we want to make sure that it's in there, otherwise we get in trouble. So when we're thinking of public accounting, that means we are an external auditor, right? And typically, this is what we're doing. We're doing financial statement audits, right? But we could also do assurance, attestation engagements. We can also do compilations and review, right? So it usually starts, the compilation is at the bottom. I shouldn't have put it at the top, but it's the easiest, right? If you're getting a compilation engagement, basically you are taking the general ledger of the client and compiling them into financial statements. If you are doing a review, that is not an audit. So you're taking the financial statements and you might just review it, kind of do a cursory. You might do some testing, but not, and you're not issuing an opinion on either one of these. The actual audit, the financial statement audit, which includes the audit of internal controls over financial reporting, that's the one that requires the most work. And you will see the only services that as external auditors we are allowed to combine is tax and audit. We can't be the consultant for the company anymore. We can't do business process outsourcing. BPO is another area that most public accounting firms had. You can't do that. You can't do advising. You can't do consulting if you are the external auditor, but you can be engaged in consulting and advising for another client. And so then we have public and private industry. And so public accounting firms, usually they have a managing partner for the whole firm, overall. Then they have partners in charge. Then they have different services, tax, assurance, advisory. Sometimes we also have litigation support here. This is where our forensic accounting comes in. If you work in a public accounting firm, you would work in litigation support. You have partners, you have managers, then you have a senior, and then you have a staff. So in my Arthur Anderson days, I was a staff, then I was a senior, and then I didn't get to partner because or manager for that matter, because in 2002, Enron hit and Sarbanes-Oxley hit, and bingo, we were, Arthur Anderson dissolved. And so this just gives you revenue for each of the big four auditing firms. I think E&Y is number one now. So it usually alternates. And so right now I would say E&Y is one, but from what I've heard from previous students, I think a lot of our students go to KPMG and Deloitte. And from what they're telling me, KPMG is probably the nicer or the better work-life balance of a public accounting firm of the big four. And then this is another area that you want to make sure you fully understand. So as I mentioned before, there are certain services that we're allowed to do. There's a whole bunch of others that we're not. And basically this was prohibited by Sarbanes-Oxley. So in 2002, it's like basically we couldn't do bookkeeping. We couldn't help them with their AIS or their financial information systems or their accounting information systems. We couldn't do appraisals or valuations. We couldn't do actuarial services. And typically actuarial services are big in insurance companies, which is depressing, right? They try to predict when you're going to die. So that way they can insure you. We can't be management, we can't be HR. So just think, the only things that we can do, as it says here, is your tax services. So we can do audit and tax. But other than that, we can't do anything. And then we have types of audit, right? Where we're looking the financial audit. This is what we're pretty much doing. If you're a publicly traded company, we're making sure that the financial statements are free of material misstatement. We're not saying they're free of error or fraud. We're just saying they're free of material misstatement. So think of materiality as like statistically significant, and materiality changes for each organization based on the magnitude, but we'll talk more about that. Then we have operational audits, where basically we're just looking where we're trying to help the company become more efficient and effective and increase their economies of scale. Compliance audits are usually done by those granting. So it could be a government. So like, for example, the state of Pennsylvania can do a revenue audit. A bank can usually do a compliance audit to make sure that you're adhering to all of the debt covenants that we have. And then my favorite, because I'm a forensic accountant, I'm not a CFE, I'm a CFF, certified in financial forensics. But here's where we're actually being engaged to do a fraud audit or a fraud examination. And then we have certification. And this is changing, but basically these 4 sections are now going to be still audit, tax, and then information technology. So the CPA exam is changing in 2024. And basically you're going to have 3 sections now, but the overarching pillar above all of this would be information systems and data analytics. So instead of having 4 sections, you're going to have 3, but they're going to be more hefty and they're going to include more kind of the data analytics pieces that we're going to do. So you don't have to worry too much about this in terms of the specificity. All you have to know for your exam is basically you need 150 credits, like the requirements, right? So there is educational level, there's experience requirements, and basic, and that's what you need to know, not necessarily the specifics of that. So let me stop there, discard that little guy. Come back to you and stop sharing to make sure we are good. Okay, so now if we go back here, one of the activities that you're going to do is you can actually watch this again. I would also watch this. It's the same PowerPoint, just hopefully I went a lot slower, but not really. Then I added an attestation engagement here. This came directly from your PowerPoint, but this is important. And so I wanted to make sure that you keep that in mind, that some of these attestation engagements is based on financial forensics, financial forecasts, examinations of the MD&A, pro forma, and then non-financial. And then here, I'm going to open this. It should take you this link directly to this document here, where I'm kind of just giving you a bunch of information. So I'm telling you the definition, I'm telling you the extra opinion, I'm giving you some keywords here, and I do the same thing for attestation services. Then I give you other assurance services. And so you're going to read that offline, but I just wanted to provide this to you, and information risk, because that is going to be on your exam, how we reduce it. So, and the nature of auditing, just overall general information I tried to give you here and kind of put everything together for you. And we're going to talk a little bit more about the types of audits as well. But I just wanted to give you a full, this is a great, I think, synopsis of what you should know from this chapter. And you're welcome, I gave it to you here. Now, this is a double-edged sword, because I have several students that tell me no other professor does this. And then several students love it. And then a lot of students say it's a lot of information. So we'll have to, well, the verdict is out. Once we go through this, we'll figure that out through some polling. And then here, management assertions are going to be your new best friend. So our financial statement assertions, we want to make sure we have these in our list, in our notes, and that you understand them. And then I give you another video here, which you're going to watch offline, about audit management assertions. And this gentleman, I forget his name, but he does a great job of doing a lot of audit. And also one of my colleagues, I think it's Amanda. Yeah, Amanda loves to audit. One second. So she is an Aussie. I think she's an Aussie. And let me see. Where is she? I gotta find her. Did I miss her? I'll put her here. I think it's Amanda loves to audit. Let me find that. Yeah, there she is. Excellent. Let me click on that for you and pause. And I'm going to add her YouTube channel. She's a friend. We've served on several committees together, and she is all about auditing. That's all she teaches. For me, I teach a heck of a lot more than that. So, but she does have quite a bit of links. I'm going to add this link to the chat. I think she's in, she's in Australia. I just don't know exactly where. So if you've ever had Dr. Tikel, he's also an Aussie, so you'll see that. And then she goes through a bunch of information. So that's just another tool that will hopefully help you. And then this gentleman also are two good YouTubes. And then of course I always add stuff too. And so then here on management assertions, I put this link, which is also from my website, in your note here. And basically, again, it goes into reliable information in business risk, and it tells you about a financial statement audit. Remember, we are making sure that the financial statements are in accordance with GAAP, but we are conducting our audit in according to GAS, generally accepted auditing standards. We went over the definition. We went over our financial statement audits and all of the attestation agreements. So I just tried to condense everything in that document for you and then add here everything as well. So it's a lot of repetition, but then here, if you click on this, you can see each of the assertions for each of the transaction types. And so, and then we talked about the management review and assertions here. We talked about professional skepticism. So I know it's a lot of information, but I try to always give you as much information so that you don't have to listen. And if you are, like kind of having a hard time keeping your attention, then I try to put everything and document everything for you and give you everything so that you can go through that. And then here's just another activity for your financial statement audits. And I think if you scroll down, you'll see you click here and it'll take you to the next card. And if you scroll down, you know that you have 4 cards and it basically goes through the 4 types of audits, which we're going to go over as well. And again, forensics is my favorite. And then this is part of the ASB. So I kind of put that there so you can see that all together. So that's that piece here. And then your types of audits, we usually stay in the financial statement audit realm, but then we also have a performance audit, which we talked about was just the economy and the efficiencies. Compliance audits, where it could be OSHA, it's usually another, it's a third-party regulator like a bank or things of that nature. And then forensics audits, because we get to have a CFF. In order to be a CFF, you need to be a CPA first. And then what I did here is I gave you, since I absolutely want you to subscribe, like log into the Wall Street Journal. I think if you click here, it shows you a CFO article where it says that the UK was proposing reforms to upgrade the audit sector. These activities here, these recent activities, will not be on your exam. So basically that's just auxiliary, so you can see how relevant auditing is. And I do believe as well, if I click here and I go into our announcements, anything that I see that is relevant to auditing, I usually post here. I thought I did something with some fraud research or something. Let me see. Yeah, so see auditing best practices. So I always try to tell you what's happening in the world, but basically you see here and what audit big firms can do, and then a little synopsis. And then I give you SEC investigations. And again, this should be, I think, Wall Street Journal articles. Yeah, so anything that I think is pretty relevant. And I think this one is also a Wall Street Journal article. Yeah, perfect. So I tried to give you that. So this is more of your activity outside of class. So you could do these at your own pace. These are not, part of your exam, but I like to give you fun stuff like that. And then I have a practice quiz. So if you click, this is not graded. So I didn't put this into D2L at all. So if you just click start quiz, you'll see there's 10 sections. And if you click on one of the answers, I didn't even read the question. If you hit submit, it should tell you what it is. What's the correct answer? Hey, we guessed right. And then you just go through these, and let's say if you click it and it's wrong, it will tell you incorrect and then show you the correct answer here. And these 10 questions are exactly what is in your, what will be your exam. So this gives you a really good idea, and you can do this at your own pace, and you can do it over and over again. Oh, he's been in the news a lot. I always do Amazon or Apple. So if you click in that search bar, like your company name, it'll give you, here's your 8K. I think it's the daily journal case that we do. We're actually going to analyze some of the 8Ks because this is where you have to make some disclosure. So here you see entry into a material definitive agreement, termination of such agreement, results of operations and financial conditions. So we have a bunch of 8Ks, and if you click on each of those, it gives you there every time, because there are certain requirements that we have to file for 8Ks, and one of those is a change of auditor. If you click on that, and then if you look at here, the 10K, these are the annual reports and the Qs. So right here, we have a 10K that was amended. That's the A here. So let's try to find our actual 10K. And so here you see the amendment, and then here you see the actual report. So if we click on our 10K here, it should give you see how it's loading that inline form. That is, using Google Chrome can help alleviate. Yeah, I'm using Google Chrome, of course. So if this is the actual annual report, or the 10K report for Tesla. And if you scroll down, you're always going to see right here, item 8. This is pretty standardized. So item 8 is going to be the financial statements and supplementary data. And if you click on that, it should take you directly to a listing. And basically, let's get rid of these so you could see what I'm doing here. And then here you see the reports of the independent registered public accounting firm, which is right here. And then we see the actual opinion there. And so here we see that PricewaterhouseCoopers is the auditor, and it's in San Jose, California, is where, because obviously Tesla was out there. I think now they have a plant in Texas, and I don't know if he's moving. I think he is moving the headquarters, so it'll be in Texas soon. And February 4th is, and then they have to disclose, we've served this as a company auditor since 2005. And February 4th is the date of the last day of field work. So the last day that the auditors were at the client. And then here you see critical audit matters, which is something that's relatively new in our audit world. And so basically that's a new disclosure. And then when we get to the opinion chapter, you'll see all these opinions, and you'll see this is pretty standardized. And look at that, you see COSO, and you see the internal control integrated framework, all that good stuff that I've been preaching probably. And then if you click on any one of these links, you'll see the balance sheet for 2 years. And then you'll see the income statement, and that is for 3 years. And then you see the comprehensive income statement, and then the non-controlling interest. So everything, and this is pretty standard, everything in the statement of cash flows. So what method of the statement of cash flows is this? Direct or indirect? Okay, I did get a comment. I think it's not a bad thing having a lot of information, but it's in so many different places, constantly jumping to different sites and links. Yeah, I have to include the links in order to get you to those places, but hopefully in including it in that, like in that first lesson or document, or in D2L, like everything is in D2L. So I would say the best starting point is D2L. So is this the direct or indirect method? I don't see anybody typing in the chat of the statement of cash flows. Thoughts? Direct? Any other thoughts? So since this started with net income, we know it is the indirect method, right? If it were the direct, that's okay. We get it wrong here, we'll get it right on the test. So if it were the direct method, we would not see net income, and we would see cash received from customers or cash paid to vendors. But since we see this reconciliation here, let me highlight that for you. And here then, and we see the total, see, because we're adding back the non-cash expenses like depreciation, amortization, and impairment. And so any transactions that impacted the current assets or the current liabilities is added here. Okay, so that's why, but that's okay. Thanks for the guess. Awesome. So you'll see that that's there. And then basically, then you see the notes to the consolidated financial statements. And then here, the overview is rarely there. Typically, this is the first note. So the summary of significant accounting policies, typically, but in this case, they had an overview. Excellent. So let me stop sharing.